Hello students, as I have explained you in the last class, today we will go for the cash flow statement. In the last recorded slide, I have explained you what is cash flow statement, what is the format for cash flow statement, and what are the three activities which comes under cash flow statement. Okay, so go through the format. We have to follow the same format to prepare a cash flow statement. Now, in the cash flow statement, as I have explained you earlier, there are three types. They are cash flow from operating activities, cash flow from investing activities, cash flow from financing activities. Okay, so cash flow from operating, cash flow from financing, investing, and cash flow from investing activities. Okay, so now uh, we will prepare the statement. Now before that, I'll read the problems and find out what they have told us to calculate. See, from the following is a summarized income statement of ABC Limited for the year ended 31/3/2005. Sales including the cash sales 20,000, that is 1,60,000. That is total sales is 1,60,000. Opening, this is operating. Okay, operating expenses excluding depreciation 1 lakh, less depreciation 20,000. Net profit before tax 40,000, add extraordinary items 10,000, provision for taxation 20%, 20,000, less profit after tax 30,000. Other informations like operating expenses, this is not opening, this is operating. Okay, so operating expenses includes loss on sale of furniture of 4,000, this is non-operating expenses. Tax paid during the year, tax paid during the year, it is 18,000. Current assets and liabilities for the 2 years are given. Current assets, you are required to ascertain net cash flow from operating activities. So in this problem, they have asked you to calculate only the cash flow from operating activities. This will come for 12 marks, only operating activities. But when they ask you to calculate cash flow statement, then you have to go for cash flow from operating, investing, and financing. In this problem, they have specifically given you to open or prepare a cash flow from operating activities. Okay, so we will go for the solution. Cash flow from operating activities. See, cash flow from operating activities. Draw the columns. Two columns we have to draw. One is the inner column, the another is outer column. Okay, now we will begin with the problem. Net profit before tax and extraordinary item. You have to begin here with net cash flow, net profit before tax and extraordinary items. Okay, net profit before tax and extraordinary items. Now go to the income statement, and here you see net profit before tax and extraordinary item, it is 40,000. Net profit before tax means tax before deducting tax and before getting extraordinary income. What is a profit? It is 40,000. So written here 40,000. Okay. Now all the non-operating expenses and non-operating income you have to deduct, add and deduct. So if it is non-operating expenses, we have to add. If it is non-operating income, we have to deduct. Now what is non-operating? Other than production purpose, other than the purchase of material, wages and laborers, any other expenses incurred or any income gained are called as a non-operating expenses. Now, or income. Now if you check here, you have see here, go to the problem now. Now here you have, you have a depreciation here. This is non-operating. Depreciation is non-operating. It will not come for production. It is charged afterwards on the asset, so it is non-operating. These items expenses you have to add. So this is a non-operating expenses you have to add. So you have taken here, see, depreciation. So what you have to a depreciation is taken as 20,000. Now if you see the adjustment, in the adjustment it is given as operating expenses includes a loss on sale of furniture. Loss on sale of furniture is also a non-operating expenses. If it is an expenses, you have to add. So see, as it is written, as it is all. If it is an income, you have to write in the bracket. Okay, that is deductive. If any deduction has to be done, it has to be written in bracket. Depreciation and loss on sale of furniture both are non-operating expenses, and this is expenses. So as it is. Now add and write in the outer column 24,000. 40 plus 24,000, it is 64,000. Net profit before changes in working capital. This is net profit before changes in working capital. Next, all you have to take is adjustment for changes in working capital. Any adjustment for working capital you have to write here. Okay. That is now working capital in the sense all the current assets and current liability. If you see the problem, they have given in the problem the current assets, debtors, that is 2 years, stock of 2 years, current liabilities of 2 years. Now these two are current assets. Now you have to write whether there is an increase or decrease. Here there is an increase, the second one it is a decrease. So see in the solution, increase in debtors, write the difference. Now increase in debtors result in increase in working capital. Do you remember the fund flow statement? There we have done the statement of changes in working capital. If there is an increase in current assets, it results in increase in working capital. If there is increase in decrease in current assets, it results in decrease in working capital. Okay. Current liability just opposite. If it is decrease, then increase in working capital. If it is increase, then it is decrease in working capital. Okay. Now in here you see debtors is an current assets. It is increased. It means the working capital will increase. It means there will be more expenses. So cash goes out. So outflow. Outflow means draw in the bracket. Okay. Increase working capital means more expenses. Expenses means cash outflow. So write in the bracket. Okay. Increase in creditors. If there is increase in creditors, see if you check the problem, there is they have given increase in creditors results in a decrease in working capital. So decrease means as it is. Okay. There is no outflow. Increase in creditors result in decrease in working capital, so write as it is. Decrease in stock result in decrease in working capital, so there is inflow, so write as it is. When a working capital increase, write in a bracket. If the working capital decrease, write as it is. Now total it. For 2,000 this is positive, 4,000 is negative, so 4,000 minus 1,000 minus 1,000 you will get it 2,000 minus 2,000. So cash flow from operation from this amount 64,000 minus 2,000 you will get 62,000. Less tax. If there is any tax you have to deduct. So tax it is given in the problem in the adjustment. It is 18,000. So you have to take 18,000